Hello, this is Brian Shannon from Alpha Trends Blogspot. It is the 11th of October, Thursday, and the market's just closed. S&P 500 did lose 81 cents today, or about 0.5%. So it was down a little bit, but I think it felt a lot worse for a lot of people than what we actually had in terms of actual end-of-the-day numbers when you look at the severity of the sell-off in the intraday time frame. First of all, I want to make sure everyone takes a look at my blog today. A lot of people who just view these videos on YouTube don't look at the blog. There's a lot of information about how I trade, and in particular the trades that I did today I posted on there as well. You can see there's quite a few trades. People will sometimes ask me, what's my view for where the market will be by the end of the year, and I have no clue. Nobody does, and really I have no interest. I'm only interested in how can I make money today. Each day is how I think. And today it meant coming into this market with a very defensive frame of mind. And like I've been saying, you need to have a strategy or something in mind that's going to tell you when to get out and lock in some of these gains. Now, if we look at the S&P 500, why isn't that updated there? On the let's look at the 10-minute time frame. You can see this trend line that we've been looking at was finally broken today, and I've been saying that it's been being tested quite a bit recently. The more times it's tested, the more likely it is to fail. Well, we had a big gap up, or just a gap up this morning, but that gap failed, and when it came in real hard. So the sellers took control. You can see right here at about midday, early afternoon, as the market broke back down below the daily VWAP. You can see we had this leg lower, which came on increasing volume, which is the typical pattern that you want to see a market come down on in order to look for the next move lower. It rallied up on light volume, and then we had another high volume move down, and then a little bit of recovery towards the end of the day. Now, looking at the 10-minute time frame, what I was suggesting as far as potential support levels went was, first of all, this 154.70, and you can see that 154.70 is right about where the market did find some support. It came down just a little bit below that, but that was the level where this prior level of resistance was, we were looking to act as support, and it did find that support in there. So you can see it's also right along that rising 10-day moving average and these prior highs in here as well. So the market has not been damaged in terms of the overall trend. It has been damaged psychologically, though, because you can see we had a large volume sell-off today that caught a lot of people off guard. I don't think it should have caught anyone off guard. You had to figure that a sell-off was coming. I've been warning that, that don't be complacent, basically. I look around and see some of the emails, and it's just crazy the risk that some people were taking. And it just seemed like it was due or getting closer each day to some kind of reactionary sell-off. Again, the daily trend has not been damaged at all. We've still got a very nice pattern of higher highs and higher lows on the daily time frame. It is an extended market. We may see support. Perhaps this market sells down and finds some support near this rising 20-day moving average. That's right now at about 153. And I've been saying 153.10 is our next level of support if this level fails to hold. So 153, I think you want to see somewhere around in there, 153 to 153.20, somewhere in there. If we do get a little bit of continued sell-off, that you want to look for maybe a little bit of support in there. I'm not saying it's going to drop down there, but we had this shock to the market today. Now it's got to do some backing and filling, and I think you're going to see probably a test of that 20-day moving average. I don't know if it's going to come because prices are going to come down to it, or because the 20-day moving average is still rising and it'll come up and meet it as the market turns sideways, or maybe a combination of the two. Bottom line is the market got a little too speculative on the upside, and it's time to just be more defensive in here, and hopefully you locked in some of those gains. I've been talking about having a strategy for locking in gains. We've also been talking about the semiconductors and saying that this range of 39.10 on the upside resistance and 37.80 is support. It would have to break that for something to really happen in this market and get it kind of exciting again. Looks like we've got that, and we're probably due for, I think the market will probably break down below this low right here, which is at about 36.70 or so, and probably come down and retest that 200-day moving average. But you can see here that we had that test, 37.80 level tested yesterday. It came down, it just couldn't hold today, and looks like these semiconductors could be in for more trouble, so be very, very defensive in your approach to trading semiconductor issues. The IWM, this left what's known as a bearish outside day, meaning that today's range completely engulfed yesterday's range. That is, the high was higher than yesterday and the low was lower than yesterday, and it closed down on the day. So it's a negative candle. The market has had a phenomenal rally. You can see that people were quick to hit the exits today, and you know, there's been a lack of the reason for the severity of the pullback is a lack of bidders. The shorts have been squeezed out of this market. Normally when a market pulls back, there's short sellers in there supporting the market with their bids, but they're not bidding anymore. In fact, they're probably turning around and selling, reinitiating their short positions, scrambling to get some coverage to the short side. If you look at the 10-minute time frame, we saw that this trend line was broken. It broke below the 5-day moving average as well. We're looking for a move in here down towards that 83 level, 83.10, 83.20 was actually the number that I have written down here. So 83.10, 83.20. It came down to that level. It's finding support initially. I was thinking maybe 82.50 would be the next level where it fills this gap right in here. Didn't quite fill the gap, but came close to it. And now we've got to keep an eye on this 82 level as the next potential support area. We can also look at some, let's take a look at Fibonacci just of this most recent move. Take a look at that. We came down a third of the way. 50% would be 82.50. So I think that lends a little bit of credence to that level as potential support, as well as the 61.8% just below the $82 level. So just got to keep it a little defensive in here right now. The NASDAQ 100, this market has been extremely extended. It's been very easy to make profits on the long side. The professionals lock in their profits quickly before others hit the bid. So that's what we have going on here. Again, no damage to the uptrend from a structural standpoint, but from a psychological standpoint, this heavy volume shows that there was a rush to the exits, and you know, that's just because you know, it's like a game of musical chairs. Who's going to be the last one standing? That's why I love that picture on my blog, especially that is that they are, you know, what appear to be Chinese people playing musical chairs, and you know, that's kind of what happened with this market. I got pretty defensive on the market actually when I first saw Baidu coming in hard. That was really the first one to crack, and you can see it came down real hard in here. Came down, I guess, about 53 points or so is what it's looking like. Let's take a look back at those Qs, though. The Qs, again, on the 10-minute time frame, I had posted this later in the day as a potential level of support right here at this 61.8% retracement level. We were looking at 52.90 to potentially be support. You can see that that level just completely failed. The 5-day moving average failed to hold it up, and I was saying yesterday that there was nothing to suggest a sell-off was coming, but if one did come, it would likely be one that comes fast and sharp and catches a lot of people off guard. So hopefully you weren't quick to buy in here, but we do have what looks like maybe a little bit of a level of support right near here, near this 52.30 level. Looking at the, that's not what I wanted to do. Let's take a look in here at the 30-minute time frame and look at this trend line as well. You can see here from a longer-term trend line, we've been kind of focused on this one here. So you can see the kind of, we've got maybe some trend line support, some prior resistance, maybe going to act as support near 52.20, but 52.90 to 53 was the level I was looking for to be the first level of support. That obviously failed. Now we got to look at this market as time to be more defensive in here. This could be the first shot. Maybe the market, you know, the 5-day moving average is still rallying, and normally I'd say we give the benefit of the doubt to the buyers. I think it's more sidelines here right now until we kind of see how this market shapes out. It's a great day trading environment, though.